Good afternoon, everyone, and welcome to the Daily Volatility Box report for December 6, 2019. We are TOSindicators.com, home of the Volatility Box. Thank you all for being patient as these videos have been a little bit sporadic, especially with the whole Wi-Fi connection in India. But let's take some time to review the activity for December 6th. And we'll start by looking at the 30-year bonds. Right, and so when the bonds actually opened up in the morning, this is between 5 to 6 a.m. Pacific, we noticed that the bonds ended up puking straight through our aggressive volatility box. And this gave us our first indication, which is dictated by this trend bubble right here, where we had this note likely trending down. And we've talked about this in several videos. Actually, now it's been a few weeks. But in the note, we talked about how this then gives you your bias that you're looking only for bearish trades, right? If the volatility box is kind of giving you this indication, it's giving you information that we're looking at a more bearish scenario for most of our trades, and volatility is at least biased towards the bearish side, then that gives us an idea of where we would like to focus. And so using that, if you are a slightly more aggressive trader, we then had an opportunity to short as price slammed into our volatility box lines. Not once, but 2 and 3 times right here. And we can see that on the third time, we actually had this change in color candle from green to orange, right? And so I think that is what makes this a little bit more useful. And so using this as an entry, you had an opportunity to go short with your stop outside of the volatility box. Our stop would have been, if we actually measure this, just to give you an idea. So we have our actual volatility box gives us about 10 ticks, and we say that we'd like to add about 1 to 2 ticks based off of your risk tolerance. So let's call it 12 ticks, which is usually what our stop would have been. What our labels up here would have dictated as well, depending on what the risk tolerance parameters you would have set, right? And so if you set $50 to $75, you should have seen a 2-tick sort of variation. And that's where we had this additional 2 ticks. So we were risking 12 ticks to try and make 12 ticks on the bonds. Now we ended up hitting those 12 ticks almost right away, right? As we hit this red candle right here, a stress-free trade. And then we also ended up hitting our second target, which is marked by this dash target line. And that was another 2 ticks from our entry. And so in total, we had actually 3 ticks. So we ended up risking 12 ticks for our first trade to make 12 ticks, which we hit right off the bat. And then our second trade, we ended up risking 12 ticks, actually 0 ticks, since we would have moved our stop to break even to make 15 ticks. And I think that's the power of the volatility box. It's the idea that after you hit your first target, really you're starting to play with a phenomenal risk reward trade. Oftentimes risking 0, especially if you've moved your stop to break even, to make either 1, 2, 2.5, but let's just call it 2. And I think that's what makes this incredibly powerful, right? It's the idea that you suddenly have the risk reward skewed in your favor. Next, we'll take a look at some of our stock volatility box entries. And so using our 2 scans that we provide to our members, among many other scans, actually 4 total scans, 2 of these gave us the following entries: Gush, W, which is Wayfair, HP, VIAB, and then GRFS and BLL, right? And you'll notice that there's sometimes overlaps here. So you'll see VIABs here and VIABs also here. And I think that's where you can start to see a little bit more strength, especially if the signals are appearing on multiple tickers. But we'll take all of these tickers and we'll plug them into our stock volatility box. So we'll start with Gush and just go straight down the line. And we'll then take a look to see what sort of entries presented themselves on any of these charts. So we'll come into our stock volatility box tool. And here, we'll just start typing in all the tickers that we have, right? And so if we just bring this over to the side, so we had Gush, we had W, we had HP, we had VIAB, and we also had BLL, and then also GRFS. Right, and once we input all of those tickers, and for all of our members, just a quick heads up, we're going to remove this, but there's no longer a limit of 10. You can run as many as you'd like, especially if you're a subscribing member. The only caveat that I'll add is you probably want to cut it off right around 20, just for the sake of Thinkorswim. A lot of you have noticed, even with the multi-time frame DMI study, is the more and more code you start to add, especially with the DMI, it's a lot of aggregation periods, that starts to slow down the Thinkorswim platform. And that's something that we just like to avoid, especially if we can, and just keep the performance up. So I try to limit up to 20, maybe 25 if you're really pushing it. But after that, you'd like to have multiple indicator lists if you really need more than 25 tickers that you're looking at any given time. And you'll notice that once we hit Generate Indicator, we have these 2 buttons that populate, giving us the ability to download both our aggressive and conservative volatility box studies. So let's go ahead and download both of these. So we've gone ahead and downloaded both of those, and we've imported them into Thinkorswim. And now let's just start going through the list of tickers to see if any entries presented themselves. So we'll start with Gush. And looking at Gush, we noticed we didn't breach either side's aggressive volatility box. So no entry. We'll keep going straight down the line. So Wayfair, once again with Wayfair, we see no entries. We stayed inside of the volatility box. Now if we keep going down to HP, we see something different. It didn't give us our fade entry. However, if you were looking at HP as sort of a trend following in the bullish direction, especially with the 5.28% move, then HP, at least the volatility box, gave you an idea of where you can start to expect the trend to start to exhaust, right? And we've talked about this several times. This is the first level where you expect trends to start to exhaust. This right here is the second level where you expect trends to start to exhaust. And really outside of the clouds is where you expect trends to really start to exhaust, where if we blow past through them, then we start to consider that as information in itself, right? And so the first level is always super aggressive, and so we like to use our second level as sort of the entry point that we're looking at. But using that, again, no real entry on HP. We'll go straight down the line next to Viacom. And Viacom was interesting in the sense that it did give us an entry, and we can actually notice if we zoom in right here, how close to the edge of the clouds we actually got. You can't make this up. This is exactly why we talk about why the volatility box is so powerful and why it's hand constructed for each particular ticker, right? We take a look here. We went straight to the very edge of the volatility box clouds right here. Keeping you safe, keeping you well within your stop, especially if you gave it a little bit of buffer room outside, knowing that we were right near the 25 mark. But knowing that we had a perfect fade where price slammed into our volatility box rather, giving you an opportunity to start to look at going short here. And now if you're looking at using the volatility box colored candles as sort of a means of confirmation, especially on that 3-minute chart that we've been talking about, then that confirmation came as we went from green to yellow to green to red, right? And really that red or orange candle is your first sort of checkmark sign, letting you know that it's okay to enter the trade. And so using that, this candle right here is where we were actually looking for an entry. Stop outside of the volatility box. Our first target is this target line right down here, which we ended up hitting right into the close. And we had an almost perfect trade where your risk to reward was so slim since you had waited for a perfect entry with this price exhaustion confirmation signal. And that's where right here, if you notice the actual risk to reward, and let's measure this out using the trend line so you can see it firsthand yourself. Our entry, even if we use the end of the candle, right, after we had the confirmation, stop is outside of the volatility box. We'll go outside of the 25 mark even if you'd like. And that gives it right around a 30-cent stop. Really, anywhere outside of the clouds is good. So anywhere from a 21 cent to a 31 cent stop is what you're looking at for a potential target of 40 cents and onwards, right? And 40 cents is the first target. And oftentimes, a lot of our members, you'll notice, you've seen this, it's where you not only hit that first target, but then we have this massive follow through down to even that second target line, what would have been your target for a long. And that's where I think the volatility box really starts to become powerful, gives you that really nice risk to reward ratio. For those of you that like to trade stocks, you now have the ability to use the volatility box for almost all stock tickers, over 8,300 tickers on the New York Stock Exchange, the NASDAQ, and the Amex. And for those of you that like to trade the futures, you notice trades like the bonds, which still gave you beautiful entries where you're now able to use the leverage of futures contracts and really start to trade in a sense where you're just trading with an edge at the edge and really keeping probabilities in mind and probabilities on your side. Hopefully this video helped you. Thank you again for all being patient, for all your well wishes. I keep getting these emails. This makes me feel really blessed for having the type of members and community that we've been able to build over the past few months. And I'm excited to see what's in store for us for 2020. Once again, thanks for watching this video. For all of our Volatility Box members, the Sunday update will still be coming out just at its usual time. We may even update the indicator one day ahead of time. And so I'll send out that email once it's ready, but you should still have that indicator ready to trade for the upcoming week. Hope you all have a wonderful weekend, and we'll see you in the next daily update.